Good evening, everyone, and welcome back. It's another day, another beautiful rally in the market, another beautiful recovery in the market. We are up 155 points. And in fact, from the start of today's trading session, we are up more than 250, 300 points. And to decode more about the market today, we have a SEBI-registered research analyst, Mr. Arjit Garg. Arjit, firstly, I welcome you and thank you so much for joining.
Thank you so much for having me, Pradhaman.
Perfect. So let's get started. Ajit,
Yes,
over to you.
absolutely an amazing day, and today's rally in the markets marks the third day of positive closing for the Indian markets. Nifty closed with gains of 155 points, around 0.6% gains at 23,123, and Sensex also closed with gains of around 0.7%, around 500 points rally, and closed at 74,616. Now, the most important and interesting part about the entire rally that we've been seeing in the past 3 days, including today, day before yesterday on 2nd of April, the previous two trading days on Thursday, we closed in with a positive, like the entire movement was positive. On Monday, 6th of April as well, since Friday was a holiday, Good Friday, so it was a long weekend. We opened on Monday, again a positive day, and Tuesday, today, again a positive day. If you just move a little back in history, you'd see the same rally was repeated on the exactly around 20 trading sessions ago on 16th, 17th, and 18th of March. Again, a Monday, Tuesday, and Wednesday, we had similar rally. We had three consecutive positive days and three consecutively strong candles being formed in the market. And then suddenly something happened on Thursday, and then we started a down move again. Now, I'm not saying this might repeat, but I'm just bringing up a point that just three consecutive green candles does not indicate that the momentum has changed. As always, the levels are still intact, the levels have not been breached. See, this positive rally would turn actually bullish and it would actually reverse the trend and it would indicate that the bottom has formed only if we cross the important levels. So, from our levels, from our perspective, from our analysis of the market, the important level is 23,300 on the upper side. 23,300 जब तक ये लेवल ब्रीच नहीं होता है तब तक you should not carry any overnight long positions. The current market scenario, the strategy to trade such market is sell on rise. Whenever you see a rise, just sell on that rise, wait for market to open a little lower, book your profits, let the market rise, and then sell on that rise again. That this is the best way to make profits out of such market, right? So that strategy is still intact. Once we close above 23,300 on Nifty on daily time frame, that is when we can maybe think about buying the dips or maybe changing our strategy from sell on rise to something else, right? The same strategy I would like to implement on Bank Nifty as well. Bank Nifty, we would see on the same timeline, 16th, 17th, 18th of March, we saw a really strong bullish candle. But if we see the recent momentum, 6th April, and 7th of March, on these days the momentum is not the same, right? The last two candles are strong, but not strong enough. The important levels to watch on Bank Nifty is 53,700 on the upper end. Until and unless this level is not breached, the strategy remains same. Sell on rise.
Got it. Got it. Okay. Now let's also cover since we were not. Am I audible, Ajit?
Yes, yes, go ahead.
Okay. Okay. Perfect. So since we were not able to go live yesterday, can we also look at the weekly global indices and mainly sector of the week?
Sure. Let's start with the top gaining sectors for that matter. If we just look at the Nifty's, the NSE's top sectoral indices heat map right over here, we can see that IT, realty, and metals, these were the three top performing sectors for today's market, right? So if these sectors are performing today, let's quickly hop onto the charts and we'll see how these sectors are performing in the previous week. So let's just load Nifty IT index right here. You see the same trend that was being followed by Nifty. three bullish candles. This is the exact same movement we are seeing in Nifty IT, and this is in fact a little more stronger than the broader index. So a small point to note here is if the sectors are outperforming your index, at least your benchmark index, this means that something is cooking in that particular sector. So for this, we would move on to the stock heat map to look at the top performing sectors from that top performing stocks from that particular sector. So let's quickly look out for technology stocks on this heat map. So we can see TCS, HCL Tech, Wipro. We are seeing Tech Mahindra, Infosys. All of these are some of the top technology stocks that have been giving you good amount of returns, not just today, but even in the say yesterday's session and the past week as well, right? So this
Right.
was a quick background of the top gaining sector, which is the Nifty IT sector. Now let's look at some other sectors as well. Let's talk about realty and metal as well. So if we would just load up Nifty realty on the charts here, right here. See, once again, the same strong momentum. Now, this is a very common candlestick pattern. We call this the three white soldiers. The three white soldiers really they tell you that the momentum is strong and is bullish. The opposite of this is three black soldiers. Three black soldiers tell you that the momentum is negative and you're supposed to see more downside in the upcoming days in that particular asset. For now, in reality, we are seeing three white soldiers, which means this rally will not really end after the next candle. This rally is going to last a little more longer. For levels, we'll just mark the important levels here on Nifty Realty. So these are the two important levels for the index. Currently, it is around 700. Two important levels from here, 730 and 758. These are the two important levels you have to watch for Realty Index. Let's quickly cover the metal index as well. If you just see Nifty metal index right over here, same pattern, same strength, and the same momentum that we're seeing in Nifty metals as well. The important level here to mark out is right over here on this candle right here. This is 12,046. So until and unless this level is not breached, the strategy, I repeat once again, the strategy is same: sell on rise. Let the markets go on. This is a bullish reversal. This is a bullish pattern. Let the markets go up. Let the markets retest the resistance which is there. And once we cross that resistance, that is when the real momentum would begin. Until that, the strategy is simple: sell on every rise that you have that you get in the market.
Got it. Got it. Ajit, let's cover the global indices.
Right. Global indices. Let's start with the European indices. So let's start with the French CAC 40. So we see CAC 40 over here. This is a daily time frame that we are watching in, so we can really get to know what the market has been doing over the one entire trading session. Yesterday's session, which was the last active session, which was on 1st of April for CAC 40, we're seeing that an interesting candlestick pattern has formed here. This is a very popular pattern. I'm sure a lot of users already might know about this. This is called the hammer pattern. The interesting fact about hammer pattern is it usually forms after maybe an uptrend, or wherever there's a new uptrend being formed, you see a hammer pattern right there. And whenever this hammer pattern falls, a very strong down move is followed. So that is the exact thing that we're seeing here. There was an up move being formed here. We saw a gap up. After the gap up, there was a hammer candle, and then the today's market, it was down almost 0.24%. So the overall sentiment, if you want to get the sentiments from the French market, maybe to just know the theme of the European markets, or maybe just to see what is coming up next for the US and for the other global indices, the trend here is neutral because the markets overall are in a tight range. ना यहाँ पे upside है ना यहाँ पे downside है. It's in a sideways. For the resistance, the resistance is at least say what 300 400 odd points away. If you seek support is also around 400 500 points away. So you're exactly in the middle of the entire range that the market is currently trading in. This is for the French markets. Let's quickly look at the German markets as well. The DAX. DAX, again, the same scene. It's currently trading in a tight range. We mark the levels right here, and you're exactly in the middle of that range. So the trend again depends on what happens globally. We are seeing there are a lot of global sentiments, which are a lot of volatility from the global news, from the global geopolitics. We can see so a lot of volatility is there in the market. A lot of random news is popping up, maybe from the US side, from the Iran side, from any other Middle Eastern country side. There are a lot of unverified sources and unverified news as well, and there are certain verified news as well. Both of them are affecting the movement in the market almost every day, right? So based on what comes up next, that will decide what goes in for the European market in the upcoming days, especially for the France and German market. Coming up to the US markets, we let's quickly check out the Nasdaq so we can just really look at the sentiments over there. Nasdaq also, there's nothing strong over here. We are seeing a really strong pullback here from the recent sideways consolidation movement. We've seen a good pullback, and again, it's just a short covering move that we're seeing in Nasdaq right now. No fresh longs can be initiated here. No fresh shorts can be initiated. The trend is simply not clear where the market is headed. Will the markets go back to 26,000 its previous high, or will the markets touch its next recent low 22,700? Nobody's sure about it, and clearly there's no indication which way would the markets go. So global markets all in all are currently in, they're also confused, like which way would the market go, nobody knows about that. So globally things are not very clear, uncertainty is almost everywhere. So I believe it's almost a wait and watch situation for the markets as well.
Right. In fact, now Nifty and all of the stocks are kind of recovering, but still, if you look at the rupee, it is still depreciating. Do you have any commentary on that?
See, rupee strengthening, that is something which is good for us. Like, if the rupees, it would keep depreciating. That would mean that we are losing value. Even if the Nifty is, say, Nifty gives you a 3-4% rally, but rupee is depreciating, which means that we are still losing in, despite gaining, we're still losing value in rupee terms. So rupee being stronger, that is a very big positive for us, and this that is one of the reasons why our markets are rallying, because there are a lot of global tensions out there. All of the energy infrastructure in the Middle East, West Asia, it's constantly being attacked, which is impacting the value of global currency. It's not just the rupee that is being affected, but there are a lot of other currencies as well which are taking a hit of the entire war that is going on. So rupee strengthening, that is something which is positive for us. Stocks recovery, that is again a part of the broader market rally. Market would rally, so would the stocks. But rupee stronger, the rupee strengthening, that is something which is very good, positive. And if this keeps strengthening, you see the crude is already at around 110, $113 per barrel, but rupee is strengthening continuously. That is the only and the major factor which is resulting in the positive rally that we're seeing in the markets right now.
Got it. Got it. Now, Ajit, if you have to tell any one main major lesson that retail investors should follow in a period like this, or you can also mention any general mistake that they make while trading.
One of the biggest mistakes in such market again would be tracking the news almost every hour. Like I've seen a lot of retail traders these days, for especially in the past 1 month, they would be sending me news messages and these news updates at 3 in the morning, 4 in the morning. Bro, what are you doing? Just relax. Let the markets react to it. Then you can really look at the news like, okay, maybe say for example, there was this news where US was attacking the energy infrastructure in Iran all of a sudden without any prior warning, and people would be sharing the news at 3-4 in the morning. It's okay, that's nice that you're tracking news, but tracking news almost all the time, even off the market hours, and trying to predict where the market would go next morning, that is a waste of energy. It's a waste of your mental peace, because maybe if you track the news and you try to guess the right levels all night long, and something maybe positive happens the 5 minutes before markets open, your entire analysis goes waste. You'll have to redo your entire analysis at 9 a.m. before the markets open. So why not save your energy and just do the analysis once when the markets open, or let the experts do the analysis for you? Open the Zdvisors app, you will get the commentary there almost all the time across market hours, post markets hour, you'll get all the important news and analysis there. So let the experts do the experts' job. You take the help of the experts. You're tracking the news, that is very well, but tracking the news 24/7 and just ruining your mental peace, that is, I believe, one of the biggest mistakes that retail investors do, especially in such volatile days.
100%, 100%. There are a lot of people that I know too, and news-based decisions seem to be wrong most of the times, especially in trading. Now, before we close off, Ajit, do you have anything to add?
Something to add would be there are two top events that are happening tomorrow. So, if somebody who is looking for what might happen in the markets tomorrow, for that, there are two important events that you have to watch. First is Donald Trump has given Iran warning. You know, the 48-hour warning, which is all over the internet right now, and the markets have been reacting to it. That 48 hours final warning, final deadline, that gets over according to the US timing on Tuesday night, but for the Indian timing, that is Wednesday morning 5:30, right? So tomorrow 5:30 a.m. something big might happen or might not happen. That particular event, which is scheduled for 5:30 in the morning tomorrow, that is important. Second, tomorrow at 10 a.m., RBI's Monetary Policy Committee, they're holding a meeting. They're starting the monetary policy discussion. Every quarter, this discussion happens and they decide whether to keep the interest rates same, to increase them, or to reduce them. The entire repo rate decision is coming out tomorrow. So these are the two major events that you have to watch. Apart from that, these are the events. If you are not into events, if you want to watch technicals only or other factors that which might affect your markets, well, crude oil is something which should be of major concern for you right now. Tracking crude should be very important, not just M6 crude but also Brent crude. We have discussed this several times earlier as well. Brent crude affects how the MCX reacts, and the way MCX reacts is the exact way our Indian markets would react during 93. So Brent is rising already. We are seeing a double top pattern being formed here, which means there's more fresh rally going to, like, something that we can see in Brent crude in the upcoming days. Important level to watch in Brent crude is its recent high $119, and above that, an important price point of $120 per barrel. The $120 price is very important because above that, not just Indian markets would suffer, but global markets, especially the US market, would suffer because majority of the imports happen through Middle East. Even Brent's oil comes through Middle East. So if this touches $120, the entire, I believe the global crude supply and the crude pricing would take a hit, which would again impact how the markets function and how the markets price it in, would be very important to see. So three important things: two events and crude oil prices. These are three most important things that you have to watch until the markets open tomorrow morning.
Right, perfect. And we are looking forward for your commentary on these two events tomorrow exactly at 4 p.m. Let's reconnect. Thank you so much for joining today.
Thank you.
Thank you, everyone.